Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're going to be doing something a little bit different today. We're going to be looking at Tsla, but we're not going to be following the usual format of just looking at the Elliott wave counts and doing some classical analysis. I'm going to be spending a while going over just how technical a stock can be, in terms of the chart interacting with all of our various technical indicators and technical analysis and the confluence that we search for between all of these various levels. And that's what we're going to be looking at today, just as a bit of a technical exercise. You might find some of this TA useful in your own analysis, you might not. We will still cover the Elliott wave counts, but that's the more ambiguous part of the video. But I just wanted to get across to you, in case you're new to technical analysis, and just for something different, just how much of an impact it has on stock prices and the movements in price action. So on the day time frame, looking at the chart from the all-time high back in November 21, swing high to swing low between these two major pivots to January 23, and then this swing low to this swing high here to the high of Wednesday 19th July 23. And then the correction we've been in since, or the beginning of a collapse to new lows. That's essentially what it's going to be. One of those two things. It's either what most people would identify, if you're not familiar with Elliott wave and a bunch of other analysis or whatever, you're just going to enter, quite fairly I feel, while that's still within that trend, you're going to potentially identify this as a bull flag, and you're anticipating a free wave move like this. That might well be the case, it might not. We have multiple ways of looking at it from an Elliott wave point of view, but that's not what the focus of today's video is going to be. The focus is, why do we move the way we move, and why do we stop where we stop and go where we go, essentially. And we're going to use TA to explain all of that. So starting with some very simple golden zones. 50, 61.8 and 65 overrun. These are the golden zones that we use, basically the golden ratio in Fibonacci, the golden retracement. Now all I've done here is gone from long-term swing high to swing low to swing high, and then I've basically applied the Fibonacci retracements, and we can see how we've got a retracement to the 61.8. Here it is. So we move down, form a pivot, and we come back to the golden ratio. Ba-boom. Happens to coincide with previous supply here at these highs, so we ran into a supply zone, we ran into resistance, and that's just where the 61.8% happened to be. We can see how we are now in the process of coming back to the golden zone from the other way. We're just shy of it at the moment. We may have a little bit more downward movement, we may come back to cover this gap, we may come back to just touch it, but either way we're back at the golden ratio. We're in that level. We're currently trading between these two zones. So that's the first thing I'd recommend anyone ever does, depending on whatever time frame you're dealing with, whether it's this pivot here or this pivot here, or what may be this pivot here, and then this one potentially here. You know, all we're doing is going from high to low and looking at the fib retracement, and we always start, before we look at our wave 2 fib and our various ones that we've got, golden zone, flat B wave, STS, wave 2, wave 4, we just start with the 50 in the golden zone, right? Because these are the high probability areas for support and resistance. You can see the 50 interacting here, we can see it interacting here, we can see this 50 interacting here, and then we can see the golden zone here as well, and then potentially here. So just moving between these levels is very common. These are the most typical retracements. Next thing I want to look at are a couple of simple channels. So we can see how the movement off of the low, this is a free wave channel into a high, and it channels really nicely. So when we're presented with free waves, there is an argument to suggest that it could be 5 and this could be a brief wave 4, but it does channel very well, and serving as a base channel off of this pivot, we never breach it considerably to the upside or backtest it before moving higher. So we have to really treat it as a free wave move. It behaves like a free wave move, therefore our labeling should be preferably ABC, unless we're dealing with an alternative motive structure in which we're allowed an overlap. We'll talk about that in a little while. But essentially we get a free wave move off of the low. So we can look at the move from the high as a corrective move down. There may be a way of counting it motively. I haven't been able to discover it, and I have a deep distaste for forcing expanding diagonals when they don't obey the rules, but either way you might be able to get that one to work here. Okay, either way we come down from high to low and then we retrace in 3. So first instinct is that there's going to be another move lower, right, after retracing in 3. Now it's not necessarily my preference, but that would be a perfectly logical thing to believe. Now if we had 5 down clearly as an impulse and 3 back, this would be an excellent short. This would be the STS off of that high, this would be the STS off of that high, this would be the STS off of this high, and then you're out of entries at that point, because you know you should have been in by now. Right, so you had multiple opportunities to short it off of this 3-wave move. I wouldn't blame anyone for being in that position. Having made that decision, it seems the most logical given what we've seen. But coming off of the low, we can see this perfect corrective channel has also been back tested. Bump, 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 bump. And then now we've fallen away from it. We also have a channel across from these highs and these lows. This is behaving like a corrective channel. A, B, C to here. Maybe this is W, maybe this is X, maybe this is Y, or maybe this is W, X and Y from an Elliott wave point of view. Either way, we're still in the channel between these two golden zones, and we're about to find support at the edge of the channel. We've got a gap above us, and we've got a 61.8% here, which is also in price support, price demand. So expecting some kind of bounce, at least in the short term, would be perfectly reasonable as well. Next thing. Now this is a fib channel, and what this does here is it addresses a suspicion I have about the corrective channel we would place from the high here to incorporate this high, this high, this high and this high, all of this resistance. This is a zero bound. Now why have I put the 100 here? Based primarily on what I think the major pivots are within this move down, and I believe that this is primarily a bit of an overrun. It comes straight to the 138.2 and stops. So if I was placing a parallel channel, you could place a corrective channel thusly. You could say, well, I'm going to take that high to that high, and then I'm going to come down to this low, and I'm going to have my corrective channel here. Say, alright then, well, if this is a 3-way move, we're going like this, eventually down to here, right? Well, the problem with that is that's minus $3. So I don't think that's likely, a total implosion of Tsla. So I think the corrective channel is potentially misplaced by doing that. So what I've done is use the fib channel instead. And what I suspect to be the 0 to the 100 bound actually being here. And then this is the overrun at the 38.2. So what I could do... Now this is just a suspicion. And I bring the corrective channel up to here instead. Then remove the fib channel. At least if we are going to channel from point to point to point, this gives us something a little bit more reasonable. That's above 0 at least, right? Around $80, 60 to $80, somewhere in there, if we're going to collapse like that. So I actually just prefer looking, when I'm looking at that at those levels, rather than being obsessed with going point to point. I just like looking at the fib channel, because there's a lot of other things to see here. So let's take a look at what else we can see within this fib channel. Talking about the 50 and the 60 specifically as being two of the most influential Fibonacci, even though 50 is not a Fibonacci number, 61.8 is, it is associated with human psychology, market psychology, because giving up 50% of anything is considered a discount, right? Half off, 50% off, it's just a human thing. If you pay half for what was the full price, or you spend half as, you know what I'm saying, it's just a being in the middle, 50%, half of something. It's a psychological level that human beings instinctively understand. We just understand it. We don't even have to have numbers to understand it. We just know what the middle of something is. So it's just hardwired into our psychology. And we can see here that we've got, here's the 50 being tested for support, here's the 50 being tested for support, here's the 50 being tested for support. Now let's look at the relationship here with the 61.8 being tested as resistance. The 61.8 being tested as resistance, the 61.8 being tested as resistance, the 61.8 being tested as resistance, 23.6, this is the swing between the levels, this is the 50, this is the 50 again, this is the 38.2. You see how we're just moving between these levels. Right, that's all we're doing. Bing, 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 bing. Here's the 100 being tested, here's the 138.2. And we're just swinging between these levels. And that's just extremely technical thing to do. That the chart just, the price just marches down. Not everything is horizontal all the time, right? Everything can be skewed within a channel, what we would call just a trend, right? So we've got a series of lower lows and lower highs, series of higher highs, higher lows. In this case, we've got all of these lower highs, and building our technical, our channeling off of these highs, given all of the interaction of the price data we can see here between these levels, just seems to fit better than expecting it to just perfectly hit horizontal support or resistance. So just setting up a fib channel the way I've got it set up here is a good idea, because it shows how not everything fits beautifully within your standard corrective channel of your 0 to 100. You know, you get overspill, and by breaking it down into the Fibonacci numbers, 78.6, 61.8, 38.2, 23.6, you get all of this other interaction between all of these levels. So anyway, whiffle waffle, there's your fib channel, there's your golden zones and your 50s, there's your actual corrective channels, which we've channeled in perfectly as well. So we've got a lot of confluence building up. That's right, that's the term we use to describe multiple intersecting technical factors, right? We back tested the 50 on that fib channel again. We're about to back test the channel here. We're about to hit the golden zone. We've got a gap above us. We came down in high volume when we sold off, and we came into deeply oversold territory on the RSI. So let's talk about those before we come back to any more bits and bobs on the chart. So what I'm saying is, yeah, we could be about to completely implode. We've seen with the long-term chart that's possible. Bum, 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 bum. This could be the next move. However, we know that everyone got very bearish here. Very, very bearish. You've only got to read the news headlines and you realise that an awful lot of people got awfully bearish. This gap down, Tesla, bad news, la-di-da. Now, the contrarian hairs on my neck stand up when the masses get bearish. Now, I'm not saying it has to go to the moon as a result. I'm just saying it puts me on alert, because I don't want to chase that trade from a short point of view. Like I said, here's your free wave move back. Here's your first swing low, and then to a lower high. Here's your first opportunity to the short. Here's what I would call the standard trade setup, SCS, that I teach on the Patreon here. Here's the tightest margin you're going to get. Right, and that was 3.6%. Right, and then if you miss that bust, you got another bite of the cherry here before this collapse. So those were the opportunities to short and make some easy profit. This is not an ideal location to be getting bearish. Right, you see what I'm saying? Yeah, it could collapse. Absolutely, that's possible, but I just don't think it's odds on the best move for the moment. It may need one more retracement. It may want to fill this gap. It may want to put one more 1-2 in before it comes down. But either way, for the moment, we know that we're at that fib level on the channels. We're at that golden zone, right? And if we bring up our regression channels for a moment, we can see that we're basically back around the median line of this long-term regression channel. So, and we're back into some kind of long-term support as well. So we've just got to be wary of the fact that we came down here, capitulated potentially on high volume, and maybe we're just looking to just turn around here, maybe to form a pivot. Now, we haven't got a pivot yet, so we can't be certain of that. So let's come over and have a look at these indicators. So RSI, looking at the oversold conditions on the daily time frame down here at 10.92, we are the most oversold we've been in Tesla's charted history on the day time frame. Right, extremely bearish. Right, historically, if we go back through the chart and we look at the most extreme oversold conditions on the day time frame, it might feel like I'm leading you by the hand here a bit. I'm honestly not trying to enforce any bias. I'm just trying to point something out, which is when we look at the most extreme conditions. There's one there, there's one here. Look for something that's equally nasty. There isn't anything quite as equally nasty. That's a very deep one there. That's also a bit deeper than its mates. Put one there. What about this one? That's pretty deep as well. And what about this one over here? That's pretty deep as well. So we got a bunch of examples. Let's see how they look on the chart. So we already know about the deepest one here. We had divergence into a low and then a rally into our free wave move. That was the oversold condition here. So we did swing a little lower, but then we rallied out of here. We're back at the similar kind of level now. What have we got before? Let's have a look. Let's expand the chart a bit. Tell you what, we'll just pull it into log, make it easier to see. Here's another extreme oversold condition on the daily time frame. Right? Shift it to the right slightly, and that was bang on the low. There it is on the oversold RSI, bang on the low. What about this extreme condition on the RSI? Oh, that was bang on the low as well. Okay, have we got any more? Bang on the low again here. Now here's an interesting one. Here's an outlier. This was on a low, but we actually built up a lot of divergence, bullish divergence into a lower low. So we've got one exception so far that we spotted. But as a rule, as a general guideline rather than a rule we should say then, shorting a stock when it hits extreme oversold conditions on the daily time frame, probably not a bright idea. Probably not a very bright idea. Most of the downward pressure has already been relieved by this point. Now, I will caveat by saying there will be examples where that's not true. We're talking a general guideline. Okay, so on the daily time frame, the MACD was actually easing off in the histogram here, and now has accelerated again with the average moving away from the signal line well below the zero bound, looking quite bearish. In terms of the bearish momentum that's been unleashed here, that's quite extreme. We've seen no sign of it cooling off yet. So before we got long, if we wanted to go long off of here, we'd want to see some sign of a pivot appearing down here. A big bullish engulfing candle would be a nice start. The histogram cooling down, the RSI moving out of oversold conditions, maybe off of one more low, who knows. An impulse on a shorter time frame. 5 wave moves supported by volume was pushed from volume back up to the upside. All the little things we look for to try and give us an idea that we found a pivot. Okay, so that's the technical analysis so far as the indicators. Now if we look at the weekly time frame for a moment though, and we bring up the RSI here, we can see regarding weekly oversold conditions, we've only just entered oversold conditions. So we could still fall for a while yet. We may fill that gap and then come lower, but we haven't reached the oversold conditions that we've seen in more extreme cases on the weekly time frame. So let's pinpoint those 3 oversold conditions that we're seeing here on the weekly time frame. Well, this one is a bullish candle with a long wick to the downside, a hammer by the looks of it. This is 1 week prior to the low forming, and this is bang on the low. So we haven't got the assurance which comes with the longer time frame of the weekly time frame, which is you don't ever short extremely oversold conditions on the RSI on the weekly time frame. I think you really are asking for it then if you do that. You're asking for the market to turn around and kick you in the bum. We're not quite there yet, and we could run deeper on this time frame, and we still have no weekly sign at all of a pivot, not like we had back here with these 2 bullish candles, 2 lower wicks to the downside here. So could have further to go in the meantime, but it's still, at least on the daily time frame, not arguably the best entry point for a short. Okay, not saying it can't collapse, it could. I'm just saying we've had our opportunities to short, right? So why am I saying all of this? Because with those opportunities having come and gone, and all of the confluential support we've got going on at the moment, it just makes me a little bit more biased, at least for the short term, to there being a rally out of this low. Whoa, bloody hell, maybe jump. But you see, the point is, all I'm saying is that I feel my bias at the moment is towards a rally out of this low. Doesn't mean it's going to happen. I could be completely wrong. I'm just trying to share with you how I think about this situation. So have we got anything else we want to look at? Yes. Well, we've got these pivots we need to clear, right? These are all part of this lower low, this low, lower high, lower low, lower high, lower low, this downward trend that we're in. This testing of the let's come off of log back into the linear chart. This testing of this 50 level that we're doing, bump, bump, bump. Testing of a channel that we're doing, bump, 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 and coming back into that golden zone, right around here. Now I've mentioned the next thing I want to talk about, and I've mentioned it before, is I want to talk about this gap here. Right. We've got what could be 5 waves complete. Now we're coming on to Elliott wave just for a moment, because as an Elliottian we cannot not see it. It's always present in our mind. We see what looks like 5 down. Okay, and we see what looks like could be 2 zigzags joined together, or could be 1 2 1 2 1 2. Either way, if we've led with a motive wave completing on high volume at extreme oversold conditions, it stands to reason that even if we're not coming back to a new high, right, and this wasn't the end of something, it stands to reason that a retrace is likely. So going back to our golden zones and our 50s, where we would be looking for resistance. We haven't got a pivot yet, so we can't be saying for certain that we're going back up. We could collapse, like I said, but if we see a pivot form here, filling this gap makes sense, pushing a little deeper makes sense. So can't take that as a pivot yet, but what we can do is we can look at the behaviour of these prior structures. So here's the 50 and the 61.8 here off of this swing high, swing low, and where do we come to? Back test the 61.8 here, 65 zone, back test the 61.8 perfectly here, breach it here, that might be 78.6. So what we'll do is we'll just pop that onto a wave 2 for a moment. Turns out it's bang on the 78.6, so it was seeking out another fib level, right? And then we can do the same with this pivot, move it to here. What do we discover? Well, we discover now that we've got interaction back at the 61.8 here and here at the 65. We've got behaviour around the 50 here, snagging around the 50, support around the 50. It's retroactive at that point because we're going from a later pivot, but you'd be amazed how often the charts line up with themselves. You know, all these levels line up with themselves. Eventually we're going to come down to a pivot down here. It may be a pivot to a new high, it may be a temporary pause, but either way, if we just take this high as well, see what we did here. Look how these highs interacted perfectly with the 61.8. Highs, 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 resistance, resistance, resistance. Let's check that again to see where this retraced to. 78.6 and just beyond, quite strong. And then let's check this move. We don't know if this is a low yet, but let's assume for a moment it is. What have we got in our way? Well, here's the 50, here's the 61.8. Look at the edge of this volume node here, right on the 61.8, right in the point of control. Where is that? Right here in this support level. Bum, 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 bum. Pop that as resistance. It would be very likely that if we pivot here, we fill the gap, but we also push back into here. Probably in some kind of free wave move. That would be a high probability zone there. Now that could be your next short, right? It could be a potential short position. So you've already had one opportunity here, another opportunity here, another opportunity here, but you might get another one here, and there's an Elliott wave count to fit that. However, if this is the completion of a count, corrective count, and this is the bullish move off of the low, you might get your first opportunity, 1, 2, to enter here and trade long to new highs. You see, this is just the various ways we can look at it. And before we start throwing numbers and letters all over the chart, just thinking about moving from resistance to support and how the confluent factors come together to decide where the price is going to go. We don't know that, we're not psychic, but we can just look for high probability areas. That's all we're trying to nail down here, just trying to nail down high probability areas. So let's now have a look at some geometry and just how technical things continue to be. So here's the pitchfork. Now this is based off of this first pivot here, because it's the best fit using a mod shift pitchfork, which lines up pretty much with my fib channel. It's a little wonky, but you know, it's a pivot to pivot tool rather than a channeling tool. And what we see here is resistance, 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 median line, median line, median line. We're not bang on it. Okay, we could probably rejig this to get closer, but I think we'd be, you know, we'd be fixing things really in order to do that. But we can see how we're trading in and around the median line. I think the fib channel is the thing that's doing it rather than the pitchfork here, but we can still see strong interaction between these levels. So we can still see median line engagement here, 38 to 50 here, the extreme bound here, bouncing off for 50 and the 61.8 multiple times around here, 38.2, 38.2. You know, we're interacting with this thing as well, and these are all confluent factors added together, which are all complementing one another. This could be the pivot based off of that prior trend. So here's support here. Before we even have the pivot, we have a habit, anyone who's watched me do this on live streams, we have a habit of staying near a median line before it even exists. It's just a function of trends, of higher highs and higher lows and lower highs. It's just we tend to, because we tend to move up in measured, you know, movements, we tend to give up a certain amount of the prior trend and claim back and push up a certain amount within the trend, if you see what I'm saying. That's how all our fib levels work. And then we'll have a look at, this is the prior pivot off of this. So if this is ABC to here, we can see how that trend off of that swing has been back tested and broken and then fallen away. That fundamentally is the exact same method as channeling. So if we were using that same channel, we're using the pitchfork, and we get that movement but with the extra detail, we get the back test of the channel, we fall away. Right, now, is there anything else I want to discuss before we move on? Let's have a quick look. Got that old head and shoulders structure. Even that neckline, long-term neckline, has been back tested. Breached. Swing around it, back test it, and kiss goodbye. So, overall, I won't deny the break of the long-term trend, the continuation of this long-term trend, okay, back testing previous levels, previous channels. It doesn't look good. It doesn't look positive. It looks kind of bearish. But it's in these circumstances, when we've hit these conditions and everything looks bearish, that I just start to get a little bit contrarian. I don't know if it's just years of being, you know, cynical, maybe, but it just makes me a little contrarian. So I'm actually, for the short term, like I said, short opportunities have come and gone. You can still enter short if you want, but you are chasing it at this point. But I'm actually going to be looking for a pivot. I'm going to be looking for signs of life out of here. I'm going to be looking for a bullish move up. And I think, given the levels we've come to, given the channeling, given our fib channel, given all of our various bits of confluence, I'm kind of interested to see if we find support down here. I'm actually more interested in whether that happens than if we collapse. If we collapse, we're just in a continuing downward trend of lower lows and lower highs, and we have been since the high back here, right? That's not a surprise. What would be more surprising would be to actually find support here, right? To actually find support here and then get a bullish response, and consider, when everyone else is being bearish and negative down here, consider the possibility of actually being bullish. You don't have to do it, but just keeping an open mind. So on that note, let's have a look at some of the Elliott wave ideas that we might have here. I'm just trying to think if there's anything else I wanted to cover. Support and resistance, you can see for yourselves. Just draw lines across the chart. Supply and demand zones. I will leave it there. I've covered the things I wanted to cover. So let's have a look at our Elliott wave counts. So this does appear to be a three-way swing. So let's start with that first. Bearish primary, broken upward corrective channel A, B, C into X. This is W, we've done an X. This is going to be A, B, C, but it seems to be breaking down into 1, 2, 1, 2, 1, 2, and then we'll get 3 4 3 4 5 A, B and C and a Y. Now if this one's correct, Tesla's fucked. Pardon my language. It's just absolutely fucking annihilated. It's going to get destroyed, and we're going to be coming down to, who knows, could be down to single figures if it's that. And it sounds insane. I'm not supporting this idea myself. I'm just saying that if this count is correct, and we are going to come down in another huge zigzag, and these are just 1s and 2s, then that's how it's going to unfold, and that would be absolutely brutal. Exactly how that would happen, you tell me. Then we've got another idea. Here's a bullish idea, right? This gives us an idea that we're actually going to find support at the edge of this channel at that 61.8%, and we're going to fill this gap, and we're actually going to swing higher. This is a bullish count using an expanding leading diagonal. So we have a wave 1 and we have a retracement in the 2. The wave 3 is longer than the wave 1, and the wave 4 is bigger and deeper than the wave 2, and the wave 5 is bigger and longer than the wave 3, and the 4 overlaps the 1, which we've got here, and the 5 will likely fall short of the channel. Right? And you'll end up with something like this. So there's a bullish count which says this was a completed correction down to the low, and now we're impulsive. Well, not impulsive, we're motive, and we're coming out of here in 5. Okay, that would be quite a surprise to a lot of people right now. That would. I don't think a lot of people would expect that. Then we've got a bearish alternate here. This is, yes, this is 3 waves, right? But it's 3 waves into 3 into 3. It's a 3 3 3. So what we're actually getting here is 3 here, corrective X wave, and then we're going to get 3 here. And it's likely, actually, if this is 3 into 3, which is what my count suggests it is, it's likely that this would be a new all-time high. But it's a head fake. It's actually a new all-time high just to turn around and come lower. Okay, so this actually breaks down into what we call an expanded flat, where we go W, X, Y, like that, A, B, and then 5 waves down in a C. And it's a huge flat structure. Either way, we've so far got 3 counts which all classify that as a 3-wave move rather than a 5, and 2 of them actually lead higher, and only 1 of them leads lower. So now let's have a look at a bullish alternate. This is cheating, I think, but it's not illegal. It's perfectly legal. It's just cheating a bit. So what we've got here is we've got 1 and 2, and then we rush a 3 and 4 into this little gap here into a 5. It does happen. It's not that common, but you do get brief wave 4s, and we are in the tech sector, and they do have certain sympathies with other highly volatile assets. We then get a channel A, B, C, W, X, Y, and we finish here in the 2 at the golden zone at the 61.8. Right? That level I've been talking about, the golden zones. We've come back to support, we've come back to the golden zone, we've reached oversold conditions of a daily time frame, we've gapped down, and we're actually going to lead a pivot here. Now we haven't got evidence for it yet. I can't stress that enough. Please don't just try and catch a falling knife just because I'm suspecting we might form a pivot here. It hasn't happened yet, but just I'm suggesting that it could, and we should be looking for it. Right? Gap fill, and then off you go. Now, an arbitrary, if you couldn't help yourself, an arbitrary stop at the prior low would be your safest bet. But waiting for a pivot to form and what we call the standard trade setup, an STS, 5 off of the low, 3 back, that would be a safer way to enter, at least for the short term. Even if it's A, B, C, back into support, back into resistance, right? That would still be a safer bet, right, than trying to just catch a falling knife. But either way, that's our next count. That we've gone 1, 2, 3, 4, 5. This is actually a 5-wave structure, which appears like a 3-wave structure. So it's probably the lower probability option. And they're the ways I look at it. So what I've ended up here with is 1, 2, 3, 4 counts, 2 primaries, 2 alternates, and 3 out of 4 of them tell me it wants to go higher. Bearish primary is the only one which wants to go lower, and I'm not even sure it deserves the title primary, to be absolutely honest with you. But either way, bearish count 1 wants to go lower, but it wants to cause an absolute apocalypse when it does it. It wants to die, it wants to implode. Maybe that's going to happen, who knows. break of trend, acceleration away, continuation of that long-term downward trend. A lot of it looks very bearish, and I wouldn't blame you for thinking so. Okay, I'm just being a contrarian. Yeah, I'm just being a contrarian. I can't help it. So I wouldn't blame you for being bearish here. But I've got a bullish primary, a bearish alternate, and a bullish alternate, which all want it to go higher. And they all essentially, very boringly, just see this as a bull flag. In one way or another, whether it's a corrective swinging free, whether it's an expanding diagonal, whether it's I can't remember what the other one was. Either way, oh yeah, forced impulse in here. All of them, right, just essentially see this as a bull flag. And we're going to continue higher. And after all of that confluence talk and all that complicated technical analysis, that's essentially what it looks like to me. Okay, now what if it stops looking like that? Right? What if it stops looking like that? What if we do get the pivot here to fill the gap? We get a 3 wave move instead of 5. We get rejection at prior support, which is these lows and these highs, right? You move into here and then you get rejected and seek out another low after a retracement, breaking this channel. Well, then you're going to be looking to move to support again, around about here, right? And then you're going to be looking to backtest and then move lower again, and it will look very, very bearish. But we're still, for the meantime, we're not that bearish yet. I know everybody else is, but we're still at these major levels. We're still channeling as expected. We're still finding support. Right? It's not game over yet for the bulls. It may actually be a buying opportunity. It's just hard to see it when everyone's so bearish. So I'm just going to leave you guys there. I hope that helps you in some way or another. I'm not really that bothered if it does or doesn't. I just thought it was interesting to show you just how technical charts can be. And I don't mean complicated, I mean technical. How all these levels interact with one another. How they're always interacting with one another. Okay, how everything's always in play. And all of these confluent factors combined with our normal classical analysis. We haven't even looked at our EMAs here, for example, where that just looks bearish as hell, doesn't it? 10's trending down, 20's trending down, 60's def crossing through the 250. You never know, could be a sign of a low forming. It often sometimes is, or it could be the sign of a continuation of a long-term bearish trend. You know, we look at those factors, and then we also look at our OBV, our RSI, our MACD, support, resistance, volume, and all the other stuff I've mentioned to try and get an idea of a likely pivot zone, a likely support zone, a likely resistance zone. And then we see what the chart does next, and we wait for a setup to form. We wait for that entry opportunity, right? Just as we would have off of all of these pivots when we saw the 61.8% backfilled here. So you come all the way back, 61.8, you lead with an impulse down, you come back in 3. That's your first short opportunity. And vice versa when we're going the opposite direction. So I'm not sure if you're going to get anything from this, but I just thought it was an interesting chart and I wanted to share it and share my ideas and show you how sometimes, you know, you can have all of these things in play and it doesn't necessarily make your conviction over the count any easier. Elliott waves are a very complicated subject, and what I very basically tried to boil it down into, which my patrons would tell you, is just because the chart's interesting doesn't mean it's simple to trade. This chart is very interesting, but it doesn't make it simple. Life is about as simple as it gets when you see a clear 5-wave impulse followed by a zigzag back into the 50 to 61.8%. We have not got that here, but that's what we look for because we know that we've got an 80% probability of swinging higher. Right. That is not the case here, but that if you can just spend your life looking for that impulsive move and retracement, you are going to be right most of the time. Okay, and that's the simplistic side of Elliott wave. But anyway, thank you for listening to me ramble. I've actually enjoyed just having a chat here on YouTube for a bit. If you're interested in what you've seen and you want to support the channel, please like and subscribe. And if you fancy learning Elliott wave for yourself, I have a series you can follow on the Patreon in the Green Star Trading section of the Discord. Just head over, follow the link, sign up to tier 2 or tier 3, and you can get access today. Take care of yourselves, guys, and I'll be back with you later in the week for either a Bitcoin update, stock market update. Haven't decided which yet, but you'll know it when it arrives. See you later. Take care.